Back to another episode of Bitcoin and Markets. I do these live streams almost every weekday. So if you're joining on Twitter or YouTube, make sure you subscribe, like, and on YouTube, even write a comment. So you guys make sure you find me on YouTube and Rumble. Bitcoin and Markets on Rumble, and YouTube is BTC Market Update. What I do here is go over macro and Bitcoin. I have my home base here is Telegram, and we share a lot of links and comments and stuff throughout the day. So, it's I try to break down, learn something new every day, take you guys along with what I'm learning, and have a good time, have a community, and just have a good time learning about Bitcoin and trying to understand where we're going in the future. One of the things that I really like about being able to devote so much time to this is that I'm able to put my family into good positions. I'm not necessarily tied to any one country or any one state, or any one position. If I learn something new and I disprove myself, I'm willing to change that, and I've proven that over the last 4 or 5 years. Hardcore pivoting from being an inflationista to being a deflationist. I've also moved cross country and other things when I thought that would be best for my family. So that's the type of stuff I hope to impart to people, at least, and understanding of Bitcoin. Dropping a few insightful nuggets here and there, and yeah, having a community, and that's what it's all about here. In today's world, I feel like so many people are just blowing in the wind, and they're unmoored from anything meaningful. And I really do appreciate you guys over there in the Telegram taking part with this. I appreciate all the people that listen to the podcast and everything. So yeah, just big thanks to everybody out there. All right, today is Friday, January 20th, 2023. I'm going down to Naples here in a couple hours, and Naples, Florida. I think somebody on the Telegram thought I meant Naples, Italy, maybe. It was probably one of you guys over there in Europe. But no, I've never made it to Naples. I've been to, in Italy, I was Florence, Rome, did all that stuff, Venice, Pisa, Milan. So I've never made it south of Rome, but I would love to visit Naples, Italy one day. But no, this one is Naples, Florida. It is down in what would you call that? The western tip of the peninsula. So I've never been down that far south on the east coast of Florida. So this will be interesting little trip. Bitcoin Day is down there, and Bitcoin Day, for those that don't know, is a one-day event where they get about 10 speakers from around the industry. So Greg Foss is going to be there. Lawrence Lepard is going to be there. I'm going to be there. There's going to be a bunch of people that you probably know from Twitter and follow. I recognize some names, but I don't necessarily keep up with all the content that they're making. One of them is Cecil, I believe, Cecil. But anyway, what they do, it's kind of fun for the speakers too, because they put us in a hotel and we get to have drinks and stuff with each other. There's this kind of get together the night before for the speakers to kind of mingle. And then the next day it's a very small group. Depends. I've been to Kansas City, was about probably about 250, maybe 300 people. And Nashville was, it was about 100, 150, but we were in the depths of the bear market. We still are in the depths of the bear market. But I'm hoping to get a good turnout down there in Naples. I know that Edward wasn't going to do it. He's the manager. He owns the Bitcoin Days thing. And he wasn't going to do Naples. But the local group down there was like, no, you need to come. And so hopefully they were marketing it to their own area and their own people. And, there's a lot of retirees down there, a lot of boomers. And so we have a boomer panel There's a lot of older speakers on this one, which is very fitting for being down in Naples. And I think it should be good. It should be a very fun day. So anyway, I'm heading down there tomorrow. Make sure if you guys do see a Bitcoin day anywhere near you in the United States, come on down. I'm going to try to make as many as I can. As long as I'm getting my travel and all that paid for, then I am willing to go and do these things and, meet people and network and do a little bit of that stuff. So I would be really, it'd be awesome to meet you guys if you are in the US and a Bitcoin day comes near you. Also, if you are outside of the US, and I haven't talked to Edward about this, but if you're outside of the US, maybe get in touch with Edward and see if, maybe you could do some European one, or you could do a Brazilian one, or in Mexico or something. And he might be interested in working with you and understanding how to set this up, how to work with the speakers, how to get people all, how to market it a little bit, because he has some expertise in these type of events now. And yeah, that would be kind of cool. So maybe reach out to Edward. And if you do, say Ansel sent you. maybe he'll give me a shout out too. But anyways, that is what I got going on this week. Today is Freeform Friday on the show. Haven't really done a freeform show lately. I just have a few kind of links that I've shared in the Telegram we're going to go over, and then open up the mic and see if you guys have any topics or comments on what I talk about or whatever. So let's go into, well, first let's start with the price, because there's a little bit of action happening on the price. So I'm sharing this. I just posted it in Telegram. I'm sharing it now on the stream. And right now, price is sitting at 21,374. It is hanging in there, guys. If it closes at this high, this will be a new high close since way before FTX. So when would that be? This would be back to September 12th. This would be a new high close. So that's pretty exciting. And going to open eyes. Okay, the financial industry, love them or hate them, whatever your thought is about the financial industry and how smart they are in spotting these things, they are going to notice that Bitcoin is closing at a new high even after FTX. Okay, and that could be very, very bullish for the price. And one thing that I am kind of concerned about is this RSI, the relative strength index, or is it index or indicator? I don't want to get this wrong. I don't know. I don't know if it's indicator or index, but I always thought it was index, relative strength index. And we hit 89 on the daily. That is extremely high. I mean, 70 is overbought. And we hit 89. The only other time we've hit 89 on a daily, if you go back in time, like going backwards, you'll hit, I think it's, what did I say? January of 2021. And then December in 2017. So it was at the first time we hit 40,000. That was 89. Then in December 2017, at the very top, that was also 89. If you go back into the bull market in 15 and 16, we hit 89 a couple times during the bull market. So that's a good sign that, this doesn't necessarily mean the end of a bull market. It can mean the beginning of a bull market, which is what I think it kind of symbolizes. But being up at 89, it's just so damn high, guys. And whatever you think about technical analysis, 89 on a daily RSI is not sustainable. It just isn't. I mean, it has reset. It did touch 80, but that's still 10 points above 70, which is overbought. So, I mean, I think it has to come down. I think the daily RSI has to hit 70, even though we're continuing to push up. Here we go right now, 21,397. So we'll see. We'll see where this goes. Maybe we just make a marginally new intraday high and then it comes back down or something. Let's take a look at the hourly, how this is looking, because we can kind of see the shape of the chart. Get rid of these moving averages for this. And it is looking pretty nice. I mean, there's a nice curve to this. And those are usually a little bit more sustainable, obviously, than, say, something that just shoots from nothing to $1,000 candle. Those aren't going to be, those are Bart Simpson patterns, right? They're not going to be sustainable. So anyway, I just shared that there with Telegram. All right, let's take a look at a couple more charts. We're going to go back to the daily, and we're going to take a look at the S&P 500. I'm going to put the moving averages back on. Getting really close to this golden cross. Getting really close to the golden cross. What is going to happen? What is going to happen on the S&P 500 at the golden cross? It could be very positive. The way it's setting up right now, we have a higher low. So we had the low set back on October 13th. I don't think that was Friday the 13th, but it was Thursday. Sorry. Thursday, October 13th was the low. And we have kind of set a new swing low. Well, we have another low here, November 3rd. And then December 28th, roughly, is a second higher low. And now if this goes back up, that would be a third higher low, moving into a golden cross, breaking the 200-day moving average, and breaking this trend line. I mean, a lot of these things are stacking up on each other that I think, I mean, it could go either way, but I'm leaning 60% that we're going to break up, 40% that we're going to break down. But there is a move coming here. We're tightening into this zone, and there's going to be a move coming shortly. So we'll see. Let's see. How many days do we have? We have about, is that 11, 12 days until the FOMC? So we could tighten all the way to the FOMC, and then they come out with a zero. Imagine that. If they came out with a zero at the FOMC day on the 1st of February, the market would take off, guys. It would absolutely shoot up through the roof. Both Bitcoin and stocks. Let's take a look at bonds and see if that gives us any idea of what's going on. The 10-year action is pretty interesting. It bounced off the 200-day very, very nicely. It is it is green on the day pretty nicely. So we'll see what happens. Like I said the other day, it really likes this level about 3.5%. The 10-year has been here for, let's see, back in December, it stayed a couple weeks at this level, and now it's been here for about a week again, just now. So 3 out of the last 5 weeks, the 10-year has been about 3.5%. So it's really liking this level. And again, it does look like it's coming up towards some sort of decision zone, right? That perhaps in 12 days' time, there's going to be a major event with this FOMC meeting, and everything's going to decide the direction. Everything is going to decide direction. And I think the yields are going to decide to fall lower. So let's take a look at some other yields. Let's take a look at the 2-year. 2-year is below the Fed funds range. Just this red box here is the Fed funds range. I still have these moving averages on here. Let's take the moving averages off. It is below the 50-day moving average, which is important. But you can see this looks like a topping pattern. If we zoom out here, I mean, you could say this might be a little bit similar back here in this zone, but it is decidedly moving down the 2-year, despite the Federal Reserve saying they're going to raise rates, despite being below the Fed funds range currently. Okay, just think of this. The reverse repo rate, so that is the rate that you can get for oh gosh, now I'm going to get this backwards. If you have money, so the 2-year is, the coupon is 4.18. The coupon is 4.18 on the 2-year. But you can take that money and you can do a reverse repo overnight. This is pristine, pristine. This is the best possible risk-free thing you can do. You can give the money to the Fed overnight and you can get 4.3%. But for some reason, the 2-year is below 4.2%. You're missing out on 12 basis points right there for some reason. I mean, just think, go back in time when everything was at zero. People would have died for 12 basis points. In Japan, they're still dying for 12 basis points. But they're like totally not taking advantage of that on the 2-year. I understand maybe the 10-year. There's a little bit different market there, right? People are saving for the long term, or they're using it in some other capacity. So it's a little bit different buyer. But the 2-year versus the Fed funds should be relatively close. Let's take a look at the 1 month. And what I'll do is I will throw on this. All right. So this is interesting. So the 4-week is right now ticking above the Fed funds range. And this does make a little bit of sense because, like I said, the reverse repo is 4.3%. And the interest on excess reserves, I think it's 10 above that, so 4.4%. And the 4-week right now is sitting at 4.55%. So that's more logical. But again, the shorter term, the shorter end of the curve is much more influenced by Fed expectations, okay, than the long end. I think it's just amazing that even the 2-year is below the Fed funds range. And we do have an inversion here. So I can't bring this up, but the 1-year is at 4.7 and the 1 month is at 4.5. Okay, I guess that's what we would expect. Never mind. I was thinking the other way. So anyway, that's interesting. So that's enough with the charts, or actually let's check oil. Let's check oil and the dollar. Being that this is Bitcoin and markets and I talk a lot about oil, you can see we're kind of at this level that we've tried to break back up above a few times. Posting this here to Telegram. Sitting right at $81 a barrel. This is WTI US oil, and trying to break above this range. We'll see if it does. I kind of expect this reopening trade in China to affect the price, maybe get up to 90, but there is not a ton of recovery going on in China. I just posted a link this morning in Telegram, and it was from China Update on YouTube. It's a good channel if you guys want to subscribe to that. He was a New Zealander that was living in China for a long time. I asked him to be on FedWatch, and he said that he didn't want to do it when he was living in China, but he just moved back to New Zealand. So I'm going to reach back out to him. And finally, after 3 years, he'd been trying to leave with all this COVID stuff, but he couldn't get out for some reason. But he just got out and went back to New Zealand. And so I'm going to reach out to him and try to interview him for FedWatch. But in this video that I link, he has some interesting data points. One of them is that land sales in 2022 dropped 50% in value terms. 50%. Now, this isn't directly related, or it's related, but it's not directly, correlated with real estate prices. But it means probably that real estate prices crashed a very significant amount. Way over 10%, 20%. Now, if you have 70% of your household wealth is real estate and it drops by 20, 30%, you have just impoverished your people. Okay. Now, another point that he had in the same video, exports are expected to contract by less than 1%, but 0.3% in 2023. But they're supposed to grow by 5% overall GDP. So that means there has to be like a bunch of domestic economy booming over there in China. And that's one of the problems with China is they're a lower middle income country and they don't have domestic consumption. They have to export to consumers, right? They don't have domestic consumption that they can. I just listened to another video that I shared in Telegram where they're saying that half the people in China live off of $150 or less a month. Half of the people in China. That's incredible. That's an incredible stat as well. How are they going to be? How are they going to make up for Western consumers, U.S. consumers? They're not. Okay. Even a middle income American can buy $150 worth of stuff from China in a single day. And these people are making this a whole month. Plus, you're dropping the wealth of your citizens by these real estate prices. How are they going to go out and consume? No, they're going to tighten their belt. So, man, I think 2023 is going to be worse for China than 2022 because all of these things are going to come home to roost. So we'll see. We'll see. I responded this morning to a girl on Twitter, and let's see if I can find that real quick. One second, sorry. She had a funny comment. It was, she said, Peter Zeihan is the Paul Krugman of geopolitics. Oh, that's great. That's great. And she said, especially on China. China to collapse in 10 years? Yeah, no. Wishful thinking. Of course, Melissa Chen is her name, so she's probably Chinese. I responded, I said, this is a funny take. Peter is hyperbolic and linear, but the Chinese miracle is over. That's for sure. So, we'll see. Okay, what else do we have here today? We talked about China a little bit. Let's talk about Lael Brainerd. So I did bring in the FOMC meeting. So we're going to see what Lael is saying. Share this tab. And Yahoo Finance via Reuters. Fed's Brainerd says data may be aligned for a soft landing scenario. Wow, she is sounding very dovish. Now, the background on her was she was nominated by Biden to replace Powell. All right, Lael is she's a Democrat, and she's a little bit more liberal, a little bit more ready to work with Davos, work with the globalists, work with climate change, that type of thing. And Powell and Wall Street weren't having it, right? So Wall Street probably said, look, Biden, our guy Powell is going to be chairman. Just get on with it. Lael doesn't have a chance. And so anyway, her candidacy didn't last very long, and Powell became chairman. But she also, with Raskin, who was the ultra progressive that they put up to be the vice chair, or was it vice chair or head of coordination or something at the Fed, where she would have direct control over where a lot of their monetary policy went to. So Powell would make the decisions on what the policy was, and then other people out there say they work and they do the actual implementation of it, right? And she was going to be this ultra progressive that was implementing this stuff, and she was going to be cutting out the oil companies, basically energy companies, from getting bailouts and working with the Fed, hurting the American energy industry and stuff. So her candidacy, quickly went away as well. But anyway, Lael is still there, and that's kind of her position. But she's much more moderate than Raskin, but she does definitely lean on the liberal side. So a lot of build up there. Let's see what she has to say. So, evidence in favor of a soft landing for the U.S. economy, in which inflation declines without major job losses, appears to be growing, Federal Reserve Vice Chair Lael Brainard said on Thursday in remarks that excluded any explicit policy preference for the U.S. Central Bank's upcoming meeting, but noted signs of slowing growth. Quote, inflation has been declining over the past several months against a backdrop of moderate growth, Brainard said in prepared remarks for a speech that noted a, quote, significant weakening in the manufacturing sector, end quote, a moderation in consumer spending, and other data pointing to now subdued growth in 2023. Before I continue, this kind of fits in with what I'm seeing. I'm seeing that CPI inflation, quote unquote inflation, prices are going to come down hardcore in 2023, and so is economic activity. So where does that leave real GDP? Well, it leaves it positive, I think. So that's why I'm saying there's not going to be actual recession. It's going to feel like a recession, but it's not going to be a textbook recession. Even if you go back to the old way of defining a recession, pre-2020, because a lot of people think they changed it just in 2022 with that 2 consecutive quarters, Q1 and Q2 in 2022. But no, they changed it back in 2020 because I think they wanted to put a recession on Trump's record. And they added it to be very subjective. So then when 2022 rolls around, they don't classify it as a recession with a big subjective window there, as to not put a recession on Biden's record. So this definitely is a political number. And a lot of people, talk about CPI and jobs and all this other stuff as being political numbers. And I try to push back on that. I understand it, and I can't confirm it. But on this, I can much more confirm that they definitely changed this to make this recession that Trump had in 2020 with COVID a very unique recession. Just go onto the Fred website, where they have those gray bars and you can see where all the recessions are. And then look at the recession in 2020. It was like 2 months. Normally a recession is 6 months, right? Because 2 consecutive quarters. So it's a very weird thing. And I know they changed that for Trump. And they added a subjective measure in there for themselves. And then they don't classify 2022. So I can confirm that a little bit more than I can confirm these other things being political. I'm sure they're not 100% apolitical. But I just can't go there saying that these are completely fake numbers. But anyway, let's continue with this story here. In addition, she said the full impact of last year's aggressive Fed interest rate increases has yet to be felt. The U.S. Central Bank raised its benchmark overnight interest rate by 4.25% in 2022 to the current 4.25 to 4.5% range to fight inflation that climbed to 40-year highs. Of course, they mean prices, not necessarily inflation, but anyways. It is likely, quote, it is likely that the full effect on demand, employment, and inflation of the cumulative tightening, remember that word was added in November to the FOMC, cumulative tightening that is in the pipeline still lies ahead, Brainard said in the remarks for a speech at the University of Chicago's Booth School of Business. At the same time, Brainard pointed to trends in prices, wages, and margins that indicated inflation, which by the Fed's preferred measure is running at almost 3 times its 2% target, was slowing and could well continue doing so. The U.S. employment rate, meanwhile, the U.S. unemployment rate, meanwhile, is at a low 3.5%. Quote, it remains possible that a continued moderation in aggregate demand, could facilitate continued easing in the labor market and reduction in inflation without a significant loss of employment, Brainerd said. She was speaking just before on the start on Saturday of an official blackout period that will restrict Fed policymakers from making further comments ahead of the January 30 Feb 1 meeting. At the final pre-meeting word of a senior Fed official, Brainerd gave little direct guidance about the outcome of that session, indicating the central bank would continue to move the policy rate closer to a sufficiently restrictive level with further rate increases, but not saying if she favored moving by only a quarter of a percentage point at the upcoming meeting, as investors currently expect. Even as the Fed parses the progress it has made on inflation, she said it would, quote, stay the course. Even with the recent moderation, inflation remains high, and policy will need to be sufficiently restrictive for some time to make sure inflation returns to 2% on a sustained basis, Brainerd said. All right, so my reaction to this is like, okay, inflation remains high. On what measure, Lael? What measure are you using? Are you using month over month? Because no, it doesn't. Even go to a quarterly or a 6 month moving average. Only the yearly remains high. That's it. Every other time period is low and is getting lower and is going negative. PPI came in at negative 0.5% in December. CPI came in at negative 0.1%. These things are going more negative, Lael. What time frame are you using here? So anyway, some other comments I wrote down here. Bullard, I don't know what Fed central bank he is president of. It's not Cleveland. Oh boy, what is he president? I can't remember. Kansas City, maybe. He says he wants to get to 5% faster. He said we just need to get there. If we know we're getting there, we just need to get there. So he's in favor probably of 50 or 75 even basis point hike. Collins, another Fed president, said he thinks they're going to get to 5% this year. Mester said 5%. So a lot of these are going towards 5%. The market right now is pricing in 0.25%. Let me bring this up. All right. So we're 12 days away, and 97% the market is saying 25 basis points. This is pretty significant. I don't think that they will go away from this. I mean, it's possible they do 0, but they did 50 last time. They do 25 this time, and they do 0 next time. So we'll see. We'll see how this works. But that is what they are pricing in right now. All right. So what else do I have here? I should just open up the mic because I do have to get out of town. So let's do that. Let's go back to my website, share this screen. Guys, make sure that you're subscribed over at bitcoinandmarkets.com. If you're listening on the podcast or you're finding this on YouTube or whatever, subscribe over at bitcoinandmarkets.com, and you can get emails of all my content that comes out. Pretty much it's a daily email, maybe 5 days a week that you get an email about this. And I have a free weekly newsletter that comes out there as well. That's a good 5-10 minute read every Monday. You can read throughout the week or whatever. So check that out. Okay, let's actually, I'm going to refresh this because it's not. There we go. There's my new episodes coming in. Episode 303 was released this morning. All right. So, guys over on Telegram, what you got? Anybody have anything they want to bring up and talk about for a few minutes here? Don't have any more admin notes to plug. just check out bitcoinday.io, and see if anything's coming up near you. I know that he was having some problems with in the bear market. So I think now that we're might be turning around to the bull market here again, there might be more Bitcoin days coming out. And like I said, if you're in a meetup in a major metropolitan area, and you have 25, 50 people that you can get to come to this, reach out to Edward, and I'm sure he can make something happen. I was thinking about trying to reach out and do something in my local area as well, but haven't done that yet. I'm sure he would be totally into doing something down in Brazil or doing something in Europe. Just got to reach out. All right. Well, if there's no comments here, I'm going to end it there, guys. Thank you for joining me this week. Hope you guys had a good week, and hope you guys have a great weekend. Get out there, spend time with loved ones, friends, and family. Play some catch with the kids if you have kids, whatever, in the backyard. And that's all I got. So